Hey, what's up, guys? This is Craig Smith with the Craigtrader Network. Thanks for tuning in. I'm real excited about what's going on in the markets right now. Looks like we are going to be on our way back up again. May was kind of a rough month, and as you know, the saying is sell in May and go away. Well, it kind of almost turned out that way. A lot of the stocks and ETFs just weren't doing so well, and then others were. You know, like Jim Cramer on CNBC says, there's always a bull market somewhere, and it's our job to look for it. And then I look at it as part of my job, for those of you that subscribe and follow me, to help you find that bull market, or that way to continue to make money in the market no matter what's going on. And so that's what part of my journey is, and that's what I try to help others do, hopefully. And I'm sure a lot of you that have been following me have been profiting, and we're just going to continue to try to do that the best we can. Before we really get started, please hit that like button, the thumbs up. Please subscribe if you haven't subscribed already. And then also, lastly, share this video with others that you feel is interested in investing in the stock market and learning more about stocks, ETFs, investments, crypto. Those of you that may be beginning, do that also. I'm really excited to also say that our accounts and investments have been going up after being pulled back and pulled down for the last couple of months. Things are really looking better, and I believe this suggests the stock market is going to continue to kind of move to the upside for at least the next 3, 4, 5 months. It's just a no-brainer with the stimulus packages coming in. The vaccinations have been doing real well. People have been getting vaccinated, and I'll leave my personal opinion out of that, but it helps to move the economy and open up things, and supposedly it's going to help people become safer, and businesses to be able to start back opening again. A lot of places are already pretty much fully open with restaurants, and that's a great thing. A lot of times, even on the financial channels, you don't hear about it, but one thing they talk about is restaurants closing, and some may never reopen again, or some stores may never reopen again, or that they're going to reopen and have trouble and things like that. That's true. The economy has been really crippled, but I think we're going to come back and come back strong. And also, we can't count out the entrepreneurs, the business people that are going to use this opportunity while they were laid off and things of that nature to get into business and to start new businesses, start restaurant businesses, start stores, and competing online and things of that nature. So, sure, we may have had some businesses quite a few businesses that went out of business, but we have to count on also new businesses coming in and revamping this economy, and I believe that's really what's going to happen. You have to also, in times of uncertainty, kind of rethink your strategy, your investment strategy. And I don't know if everyone has an investment strategy, but you should. In order for you to have long-term goals, whether you're a short-term, long-term investor, or options trader, swing trader, momentum, whatever it is you are, you should have some kind of strategy to what you do. And that's what I try to do. Of course, the strategies don't always work, but you have to have a plan. Okay, if you fail to plan, they say, you plan to fail. And that's true. You have to have some kind of strategy, some boundaries, some goals, what you're trying to do, where you're headed, a roadmap, in other words, in the investment world. And so I just want to kind of throw a few suggestions out there to you guys that may not have a strategy. Once you start investing, it's good to continue to keep on consistently investing. And it doesn't take a lot of money, because all of our financial situations are different. But if you consistently put something into your investment account, that's one of the things I like about Robinhood account. The Robinhood account, which if you don't have one, I would suggest everyone have a Robinhood account, no matter what other platform you have. Also get a Robinhood account, and you can get one by hitting my link below. I have a link for opening a Robinhood account. That'll help you and me get some free stock also. In addition to that, I like the fact that Robinhood platform allows you to buy partial shares. And so no matter what the price of the stock is, it can be 20, 30, $40. You can start with literally $1 investment in that stock. I have a daughter that started, she bought into 20 stocks for $1 each. So she started off with $20. And then I have another daughter that consistently puts money in every month, just has it automatically put into a particular stock or an account at the rate of I think $20 a month. But you can set your own goals, set what fits with you. Do invest as much as you can, but don't allow it to hurt you or break the bank. And by setting it up consistently, it'll just get taken out automatically, put in that particular investment, and then you can invest in it on a consistent basis, which is called dollar cost averaging. So no matter what the stock is doing, hopefully it's consistently going up, but whether it's going up or going down, you are participating in the investment. You're continuing to get into the game, as I say, and then you have your increased chances of buying at a certain average price. But as the price goes up, then your investment also goes up. I like the fact that I not only do that, buy consistently, but also as I get some continuous income coming in, then you can make also your own investments. Say for instance you get an extra $30 to $40, $50, $100, whatever. Well, you may want to take a percentage of that money that has just come in and take whatever it is, 10%, 15%, 20%, and throw an extra $5, $10, $15, $20, $100 into your investment account and spread that around in the different investments that you're doing. And as you know, I'm a proponent and a fan of diversifying. Sometimes I think I overly diversify, but it's good to have diversification. You know, J. Paul Getty once said that he'd rather own 1% of 100 companies than 100% of one company. I want you to think about that. He'd rather own, and he was a billionaire oil man who had interest in all kind of companies, but he'd say he'd rather have 1% of 100 companies than 100% of one company. And why is that? Simply because if you have one investment only, like some investors do, one or two investments, your whole investment account is riding on the performance of those one or two investments. If something happens, or if the CEO or the financial manager steals money, or there's a scandal or anything like that happens, all of your investment money is riding on this particular company. Now, don't get me wrong, it could be a great company and it may not put it out of business. It may even provide a bigger buying opportunity, but it's just safer and better to put your money into a few different investments. I always say at least 10 different companies. That's just the way I do it. But I think it's safer. It is a lot safer. It's less risky. And also you can diversify by having it in different industries and services, so that as the particular market rotates and there's different things happening into, say one industry is going up at a time, one may be going down, then your investments are not moving at the same time in one direction. There's always, like say for instance, precious metals, which, speaking on precious metals, I like gold, I like silver, I like palladium, things like that when it comes to precious metals. My favorite precious metal investment would be silver, because of the price of silver. The price of silver also moves with gold, and it's inexpensive, and also it's a commercial and industrial metal, as well as what's called precious metal. So it's used in different industries to help produce things. So it's not just like gold where there's a value placed on it simply because it's a metal, but it has, and gold of course is used in jewelry, but silver is used in jewelry, but in also all kind of other industries in manufacturing and commercial processes. So it's a much more widely used metal, and like I said, it's underpriced. It's been really artificially kept down by certain powers that be, and we even know, I mean, you can Google it. JP Morgan has been caught and fined billions of dollars, hundreds of millions of dollars, billions of dollars for rigging the silver market. A lot of these companies and businesses are suppressing the price of silver and artificially keeping it low right now. Now, that can work to my and your advantage, because we can continue to accumulate silver, whether it's physical silver also, which I believe get physical silver, but you can also accumulate the silver ETFs, which one of my favorite is SLV and SIL, which is the silver ETF, also silver miners ETF. And you can just continue to, over time, accumulate in that. Those usually are set up also as a hedge toward things that happen in the market. When there's some bad news or volatility in the market, generally the precious metals continue or will start going up even more, while some of the stocks are coming down. So it kind of gives you a more well-rounded portfolio, and that's what we are looking for as an investor. One of the main goals of investment is not just to make money. You do want to always make money, but one of the strategies for successful investors is to help also limit your risk. So you don't want to put too much at risk at any one time. And I've learned the lesson. Others have learned the lesson. Sometimes you just think you're so much smarter than and then we could have what's called a black swan event, where something comes out of nowhere, like the pandemic, like that Archegos Capital debacle that happened with those companies, and it drove the price of few stocks down because of it. These are things that are unforeseen by the average person, and so you have to prepare yourself for the unforeseen. You may be sure about things, you may feel like it's really going to pan out, but we know some investments just don't work out the way we think they should, and nobody's 100%. But what our job is to do is to get a higher level. You'll make money and profits if you're successful at least 55% of the time. So once you get past that 55% and increase your chances of profiting in the higher percentage areas, then that's what we have to do, and that has to be our goal as investors, is to increase our percentage of winnings and limit the losses. So you're not going to, everybody's going to lose at some point. Nobody's 100%, like I said. And so, with the strategies that I believe I'm putting in place and also using, I've been able to consistently beat the market, consistently beat a lot of these hedge funds and things of that nature. So we can do that, and let's do it together. Let's continue our journey so that we can go forward with that. In this particular video, I also wanted to mention 5 stocks that I'm paying close attention to for the next week, and I'll put them up on the screen real quick. They are CocaCola, symbol KO, Pfizer, symbol PHE, and you can write these symbols down if you're not familiar with them, so you can look them up. AMC Entertainment, AMC, BlackBerry, BB, and Sundial Growers, SNDL. Now, you may be familiar with some of these companies, and some of them you may not be familiar with, but I'm just going to kind of go through these kind of quickly. Coca-Cola, I really like Coca-Cola as an investment, as a company. We know that with the recovery play for the economy, Coca-Cola is going to be a major participant in that recovery. And so you got to think about the restaurants, the bars, the grocery stores, the entertainment venues, the concerts, the baseball and sports teams and games, and everything that's going to be reopening. Can you imagine how much Coca-Cola is going to really ramp up during this time? So the past stock performance, I believe, is nothing compared to what's going to happen over the next 6 months to a year. I really believe that Coca-Cola is pretty much an easy double in the stock price over the next year. And so I've been accumulating it. I've also been an option trader in it. So I'll trade in and out of it as the price continues to go up or go down sometimes, but it's been steadily going up. And then also the thing about Coca-Cola is that when you own it, for those of you that are long-term investors, you get a dividend payment from it. So it is paying, I think, around a 3% or so dividend, which is a dividend payment is a payment that the company is giving you just for owning the stock. So in addition to that 3% you're making off the dividend every year, then you're also getting the upside increase of the stock price. And so it's more bang for your buck, and it's income. So as you build your portfolio over time, these dividends usually in Coca-Cola, they increase, and they'll continue to pay you a dividend. Now the next company that I had put up was Pfizer. I'm not really particularly excited about these pharmaceutical companies and the way their stocks perform, and you generally don't hold the pharmaceutical company stocks because they are so volatile and they're up and down. But over the next week, I'm looking at Pfizer as a short-term play. I may hold a little bit of it, but the good thing about Pfizer is last week they announced that Pfizer is beginning to get approved and roll out more into Europe also. So not only are they handling the vaccinations in the United States, but they're rolling over and also becoming popular in vaccinating in Europe. So I think that's great potential. That's great news for the stock. The stock had been a little bit suppressed lately, which is a good thing. You got to remember, when stocks go down in good companies, that's a buying opportunity. If stocks go down in a bad company, it's time to run. But when stocks go down in a good company, good performance stock usually, then that's a buying opportunity, and you can get in, and that'll increase your upside, have a greater chance to increase your upside. AMC Entertainment and BlackBerry, we know that these companies are really a favorite of the Reddit crowd, the Wall Street bets. They've run these stocks up quite a bit over the last week or so, and so I'm taking a look at them. AMC, I would say keep an eye on. BlackBerry, AMC has run up quite a bit. BlackBerry has run up some, and it hasn't been publicized much, but I'm keeping an eye on both of those. AMC may come down a little bit more, so we're watching it. See what kind. I'm trying to see where there's a good opportunity to continue to get back in. I don't really trade the options on AMC much because they can get kind of expensive. I try to keep at a certain point with those option investments. BlackBerry, I believe, has great potential also over time, even though it's been run up a little bit. I'm watching and I'm accumulating some BlackBerry stock right now. BlackBerry really is a reinvention story. They kind of reinvented themselves. I don't know if some of you all may remember. It's an older company that was really like a cell phone company, pretty much, that has reinvented itself into a cybersecurity company now. And so it had become one of the short squeeze plays, and as I said, stock that has been running up lately. So I'm keeping an eye on that, and I'd say you should put that on your watch list also. And last but not least is Sundial Growers. Now Sundial Growers, stock symbol SNDL, I made quite a bit of money on it last week and some options trades, and I've been accumulating this stock over the past couple of months. So it's very cheap. It's under $1. It actually hit over $1 for the first time this week in, I believe, almost a year. And so it's I think it has great potential, especially in the cannabis industry and cannabis play, that this is one of the stocks to definitely watch and invest in. And like I said, it's under $1, so it's cheap. It doesn't take much to accumulate 100 shares or a couple of hundred shares over time. And I just really believe that now is really the time to continue to accumulate these cannabis stocks. We know with the recovery, the reopening, also many states are beginning to pass more legislation. This is going to help the economy even boom more, and the politicians and business people also know this, that by allowing the marijuana industry to continue to grow, to legalize it more, is going to open up more opportunity for jobs and open up more opportunity for businesses to continue to expand. And so just kind of taking a look at Sundial Growers over the last year, It's up 14.66%, mainly because you see that it had spiked high at one point and then came down. This is that Robinhood graph I was telling you about. I really like these graphs too. They're easy to read on Robinhood. The past 3 months is down 28%, which is expected. We the market pulled back, everything pulled back. Cannabis industry has had a pullback altogether. But as you can see there, those red and green lines, basically the red lines, of course, are sellers. Green lines are buying volume going up. As you get down toward the bottom right, you see it's beginning to take that turn up, and we see that that was the pattern over the last 3 months. 1 month it's up 12.57%. Even if it keeps that particular pace at a monthly return of 12%, you're looking at a yearly return of over 130%. So that's a more than double easily, which I think is going to even do greater than that. Over the past week, it really ran and did 31% return in the past week. And so I'm continuing to accumulate some of this stock, but also I'm really on it in terms of option trades, because the options are pretty reasonable and cheap for an options trade. And so I think that'll do well. We're going to take a look at these. I want you guys to put those 5 stocks on your watch list. Also consider investing in them. Also, I just want to say I'm not an investment advisor. I'm not a stockbroker. I'm simply an investor who wants to make money, who wants to help others make money. And so I teach. I put the information out there for free, and I believe some of the information you're getting here for free that you're not going to get pretty much anywhere else. There are certain channels that do tout certain things, but you're going to do very well following my channel, sharing it with others. Please like and subscribe. Let others know about it and follow me on this journey. I'm going to also start making a few more videos about some other topics and different platforms that I wanted to talk about. So in the meantime, continue to look out for me. Please hit that notification bell too on your YouTube channel, so that when I make new videos, you'll be able to get notified of it and let you know immediately. And please, all comments are welcome. Constructive comments, of course. All comments are welcome. Please put those down there. Like, subscribe, share again. Also, I just want to let you know that as we're about to leave, you can't win the game if you're not in the game. So get in the game, play to win, stay blessed, stay positive, stay focused, and I will see you soon.